Good afternoon, Campbell McCrary here, Amvest Capital, New York City. Welcome to the Amvest Capital Inc. live webinar with Skeena Resources Limited. Skeena trades on the TSX as SKE and on the OTCQX as SKREF. Hope you'll enjoy today's program. Also be available in free and replay mode. Feel free to type in your questions in the question pane of the GoToWebinar control panel, and we'll ask them in real time. Amvest, of course, is a New York-based specialist in investment management and corporate finance firm focused solely on the natural resource sector. Please note this call is for informational purposes only. Call will be available, replay on demand will be available about an hour after we wrap up at amvestcapital.com/replays. You can also get an email from us. And again, please send in your questions, and we'll bring them up right here live. So we have today Kelly Earl, who is the Vice President of Communications of Skeena, and is going to take us through the story. And she's also a geologist and, interestingly, a founding member of the British Columbia Regional Mining Alliance and a founding industry advisory board chair of the Center for Advanced Subsurface Earth Resource Models. So she knows what she's talking about. I see your screen and I see you. So I'm going to give you the floor and take all the time you need, Kelly.
Great, thanks very much, Campbell. So hello everybody, welcome, thanks for joining me today. Excitingly, Skeena just released our pre-feasibility study for the Eskay Creek project, and that just came out last week. So I'm going to be giving you all an update on the PFS and to tell you all what to look forward to in the future 18 months with Skeena Resources. So jump right in, obligatory forward-looking statements. Just remind everybody where we are. We're in the Golden Triangle of Northwest British Columbia in Canada. We have two projects, Snip and Eskay Creek, but our flagship is really the Eskay Creek project, and that'll be the focus of this presentation. And both our projects are located in Tahltan Territory. And remind everyone again, one of the reasons why we love Snip and Eskay Creek so much is because of the vast improvements of infrastructure since these mines were in operation. So we have Highway 37 in the Northwest Transmission Line, which goes all the way up to Newcrest's Red Chris mine. And then we have 3 hydroelectric facilities that were built within the last decade, right in between our 2 projects. So it's because of this cheap green hydropower that we're able to bring Eskay Creek back online at a much lower cutoff grade than historically. So a bit of a reminder on the historical production of Eskay, produced from 94 to 2008. It was the highest grade gold mine in the world when it was in production. It produced at a staggering 2.5 ounces per ton gold equivalent. And of course, because it was so remote at the time, the price of gold was so much lower, and there was a lack of infrastructure, it meant that the cutoff grades were extremely high. So anywhere from 15 to 30 grams per ton were the cutoff grades. So our thesis was simple: what was left behind that was not economic at the time that would be economic now? And of course, we've changed it. It was an all underground mine historically, and now we're looking at it from an open pit perspective. So this is the new resource that we put out in April. Global resource is 5.6 million ounces, but it's really the measured and indicated in the pit that we're focused on, the 5.12 million gold equivalent ounces in the pit. This is what we push forward to the PFS, and this is what we've converted into reserves. Before I show the reserves, I just wanted to touch on the image here. So everything in gold is the M&I. Anything in blue that's left behind is inferred. So you can see there's 230,000 ounces left behind that are inferred. We're busy doing infill drilling at Eskay Creek as we speak, so that we can take all these inferred ounces and include them in the full feasibility study, which will be out in Q1 of next year. So let's bring up the reserves. We had about a 76% conversion rate from resources to reserves. We're happy with that. Currently, we've got 3.88 million gold equivalent ounces in the reserve category, and you'll notice that the grade has increased. So we've gone from 4.2 for the resources up to 4.57, so 4.6 for the reserves. So we're pretty excited about that. Eskay Creek will once again be one of the highest grade gold mines in the world when it goes back into production, but this time as an open pit mine. So let's talk about the numbers. A lot of changes since the PEA, which was done in November of 2019. So these are all the updated PFS numbers we put out last week. We did it at $15.50 gold and $22 silver. You can see it's a 1.4 billion after-tax NPV at a 5% discount, 56% after-tax IRR, 1.4-year after-tax payback, and $265 million in annual after-tax free cash flow. So an extremely robust project, and that's because it's just so high grade for an open pit mine. So a few other changes. You can see the all-in sustaining cost has dropped. It was $615 in the PEA. Now we're down at $548. There's a few reasons for that. One is the increase in grade, but the real factor that changed this for us was the increase in payabilities from the smelter quotes that we got. And the reason that we got increased payabilities is because we changed part of the processing plant. We added what's called the desliming stage, which simply means that there's clay minerals in the deposit that we're holding on to the gold and silver. So we've added another stage. It's separated the gold and silver from the clay minerals. So we're able to get a much higher concentrate grade. So in the PEA, we had a 25 gram per ton gold con with silver on top of that. And in the PFS, we used a 45 gram per ton gold con with silver on top of that. So we now have a 60 gram per ton gold equivalent concentrate. And when you have a gold a concentrate that's that high grade, it means that you have more smelters interested. So we were able to get more terms and much more favorable terms. Also, secondarily, by adding this to desliming stage, we've been able to keep more of the deleterious elements, the mercury and the arsenic, in the tailings. So we have more going to the tailings and less going to the concentrate, which means that we're getting better terms overall from the smelters, paying fewer smelter penalties over the life of the mine and increasing the payabilities. So it was really a breakthrough for us, and that's what allowed us to have this much lower all-in sustaining cost of $548 US an ounce. I mentioned the grades increase. We're going to be producing at an average grade of 4.6 grams per ton gold equivalent. The mine life has also increased. It was 8.6 years in the PEA. We're now almost at 10 years. And then, of course, the Capex has also increased. So we're up to 381 million US right now. The PEA was 233. So it's a substantial increase. And that came from, one, when you go from a PEA to a PFS, you put a lot more detail in there and a lot more pricing detail. There's been some inflation as well, but the major drivers of the increase in the Capex are that desliming stage, so the processing facility upgrades, we added money there. There's a substantial amount of pre-stripping that we've added to the PFS mine plans. And then the other area where we had to add a bit more Capex was to the power plant. So before we just had a line running from Eskay Creek to the Volcano Creek hydroelectric facility, and we've had to add a substation. So those are the three main driving factors. But with that increase in Capex, you're also getting an increase in ounces produced per year. So the PEA had 306,000 gold equivalent ounces per year, and we're now up to 352,000 gold equivalent ounces per year. And we see a pretty clear pathway to breaking 400,000 ounces a year when the full feasibility study comes out in Q1. So I wanted to talk about the production profile a little bit. I mentioned it's 352,000 ounces over life of mine, but you'll notice it's very front weighted. So for the first 5 years of the mine life, we're actually producing more like 450,000 ounces a year on average. And then it drops off substantially in the back half of the mine life. And we've planned it like this because we know we're very confident that we're going to be having more ounces come in after the feasibility study where we can backfill the mine life. So areas like Albino Lake, the underground exploration potential, the open pit exploration potential, if we could potentially add Snip to the project. So we're very confident we'll be able to backfill the end of the mine life. So that's why the production profile is front loaded right now. We hope to add more to the back. We're also looking at increasing the throughput by another 15% for the full feasibility. So 350,000 ounces right now. Our target's 400,000 ounces for the feasibility, and then we hope to go above and beyond that with the future of Eskay Creek, either with exploration drilling or adding Snip to it. Our target is still to be a tier 1 asset and to be producing 500,000 ounces per year. So a bit of an overview on the mine plan. There have been some small changes, one of which is the plant facility. We moved it closer to where the existing pits are and where the waste rock facility is. It was further away in the last mine design. We've moved it closer. One of the reasons for that is snow management. We operated all winter in Eskay Creek last year, and so we learned a bit more about snow management at site, so it makes more sense to have everything compact. Also, we've added more of a stockpile, so we can have about a 4-day stockpile right beside the plant site in case we do get snowstorms. One of the other things is that in the PEA, all of our waste rock was PAG, which stands for potentially acid generating. And now you'll notice here that the waste rock facility is only NAG, which is non-acid generating. And that's because we've decided to move all the potentially acid generating material into the permitted tailing storage facility. So we do have a permitted TSF on site. All the tailings are stored subaqueously, and in consultation with our Tahltan partners, they decided it would be best if we put any potentially acid generating material into this TSF because we know it works. It's been continuously monitored for decades, so we know that's the safest method to dispose of the PAG material. So that's why we were happy to oblige and move all the PAG into the TSF. The other things I wanted to point out, this is of course the Albino waste facility where all the waste rock went when the original cutoff grades were anywhere from 15 to 30 grams per ton. So as most of you are aware, we did some drilling here in March and we've had some spectacular hits so far. It's very shallow. We estimate there's several 100,000 ounces of material in this waste facility. So we're going to get a barge out here in probably the August-September time frame and drill off the rest of the waste facility and then better define just how many ounces are left behind at Albino. And then of course, I already mentioned the permitted tailing storage facility, but it greatly expedites the permitting process to already have this on site. It's a permitted discharge point under the Mines Act. So it's a big check mark for us in terms of a brownfield site and the existing infrastructure that we have. A couple other changes from the PEA, the main one being that we've added this northern pit expansion in the NEX zone. So all of this material that you're seeing here was underground in the PEA. We've now converted it over to open pit. And that's of course because we're permitting from an open pit standpoint only to begin with. We're pretty confident there'll be an underground component in the future, but we're not quite there yet. So open pit only to start, which means we had to do a lot more drilling to get all this material into the open pit. It changed the strip ratio slightly. It was 7.2 to 1 in the PEA and we're at 8 to 1 now. But again, the grade has also increased up to 4.6 grams per ton. In terms of drilling for the rest of the year, I mentioned we're busy doing infill right now. We're about to launch some exploration drilling, probably 35,000 meters worth of exploration drilling and 5,000 meters worth of infill, which is a flip from last year. We did 83,000 meters last year and 90% of that was infill drilling and next to no exploration. So nice to actually get to some true exploration drilling this year. And the 35,000 meters that we're doing are going to be targeting open pit resources. So much like the 22 zone, which is the southern end of the photo on the right, we're looking for more open pit style targets that we could hopefully pull into the mine plan. And then after that, we will target the underground exploration potential. I know there was some excitement. We did drill a couple drill holes and we tagged into 2 new lower mudstone horizons last year. So the contact mudstone horizon you see here in the bottom left, that's the main mineralized horizon. That's what gave the 2.5 ounce per ton material historically. That was mostly mined out because it was so high grade. And what we're looking for is lower mudstones that occurred earlier in geologic time. This is a VMS deposit. It means it represents the seafloor. And of course, the seafloor can move over time. So we're targeting lower mudstone horizons. We had some wonderful success last year with the lower mudstone and the even lower mudstone with some spectacular high-grade hits like 314 grams per ton gold equivalent over 2.2 meters. So while we're super excited about those, we're prioritizing. There aren't enough hours in the day, and unfortunately, drills are a hot commodity in the Golden Triangle in a bull market. So we're starting with the near-surface exploration potential first, and then we'll tag into that underground exploration potential later on. And I mentioned that we're looking to backfill the end of the mine life at Eskay, and everything I've just mentioned are ways that we could do that. So either with the drilling at Albino, the several 100,000 ounces we think are there, more near surface targets or underground targets. Now, as much as we'd like to get all that done in time for the feasibility study, it's not possible. And our #1 target is to stay on track with the feasibility. And I'll go through timeline here in a second. So the way we see handling all the other exploration upside is with PEA updates. So the infill drilling that we're doing right now, that will make it into the feasibility study in Q1, but that's it. If we have any exploration success, we'll have to go back and infill drill that, and we'll have to geotechnically drill that. So it won't be feasible to have that in the full feasibility study, but we would look to put out PEA updates during the year next year. So if exploration is a success, or Albino is a success, or if we can add Snip, then we'd look to put out a PEA update at some point later in the year next year to show the additional upside potential that's left at Eskay Creek. So I just wanted to touch briefly on some statistics about Eskay Creek. The top chart here shows Eskay Creek compared to the other currently operating open pit gold mines in Canada. So at 352,000 ounces a year, we would be the third largest operating mine in Canada. And of course, as everyone's aware, it's really the grade that makes Eskay Creek stand out. Average open pit mine in the world is at 1.5 grams per ton gold equivalent, and we're sitting all the way up at 4.57. So it's really the grade that makes Eskay Creek such a spectacular deposit. Something else Skeena's been working on as a management team is ESG across the board, and in particular, lowering our carbon footprint. So if we look at the chart here, the average open pit mine in the world produces 0.73 tons of carbon dioxide equivalent per ounce of gold produced. The average underground mine, of course, produces less because there's less rock that you have to move from an underground mine, so it's at 0.36 tons. And Eskay Creek's all the way down here at 0.18 ton of carbon dioxide equivalent per ounce of gold equivalent produced. And this is, of course, twofold. One, of course, it's high grade. So because it's high grade, you have to move less rock to get an ounce of gold equivalent. And then the second is the hydroelectric facilities nearby. So it will be 100% powered by green hydro, which of course keeps our carbon footprint down. In the PFS, our fleet that we're using is still all diesel powered, but we're looking to improve upon that. And we're going to see if we can get an all electric fleet used and get the numbers for that and include that in the feasibility study as well. So it's a mission of Skeena to try and be as green as possible. And we have an amazing opportunity with Eskay Creek to do that. So that's what we're going to keep pushing on doing. So hopefully we'll be able to see some more exciting changes in that direction for the full feasibility study. Let's talk about timelines now. So we just released the PFS. We've got the infill drilling underway. Then we've got 35,000 meters of exploration drilling. Excitingly, we've officially launched the environmental assessment process. We've put in our project proposal, and we've also commenced our impact benefits agreements with our First Nation partners, the Tahltan. So an IBA is standard in Canada, and you have to do that with all your First Nations partners. We're very fortunate. We have one with our Tahltan partners that we have to complete. Most companies do this after the feasibility has been complete, but because of our strong relationship with the Tahltan, we've already started the impact benefits agreement, and we hope to get that completed within the next 6 months. And then, of course, this will all lead into the full feasibility study, which will come out in Q1 of next year, and then we'll launch project financing off the back of that. So we haven't put anything much more forward-looking than that into the presentation as yet. We are in active discussions with the Tahltan and the government of British Columbia on what we're calling a permitting charter. So it would lay out a timeline to production. We have an MOU signed with both groups. We're looking to make it official, and it'll be a public document. We hope to have that made public hopefully in September at some point. And right now the target is to be in production in 2024. So this permitting charter would lay out the foundation that all parties involved, the First Nations government, the provincial government, and Skeena would work towards to stay on track. So hopefully we'll have that announced and soon. We're pretty excited. Eskay Creek is going to be one of the first projects in British Columbia to follow DRIPA, which is the BC's government interpretation of UNDRIP, the United Nations Declaration Rights of the Indigenous People. And along with that comes consent from the Tahltan to put the mine into production. And as far as Skeena is concerned, they already have consent their consent is very much needed in order for us to put the mine into production. So we're excited about that. And along with that, First Nations ability to give consent also gives them the ability to expedite projects. So if it's a brownfields project that has full support, then you can also expedite the timeline to production. So we're excited to be involved and continue to work with the Tahltan and the government to make sure that we get Skeena permitted in a timely fashion. Also on the time front line, while I'm talking about Tahltan, we've done some other exciting things with our Tahltan partners lately, one of which is they just made an equity investment into Skeena. So they made a $5 million investment into Skeena earlier this year. It's the first time they've made an investment into a company. This came out of discussions with them about wanting to have greater ownership in the projects that were being built in their territory. So we're very honored that they're now shareholders. And the other exciting thing we did recently was a creation of a nature conservancy, the Mount Besides Conservancy. So Skeena had an old project called Spectrum that we weren't working on. It was right beside the Tahltan Sacred Mountain, and we were told quite bluntly by them that it would not be favorable to have a mine there. So we returned the claims to the government, and in exchange and partnership with the British Columbia government, the Tahltan, the Nature Conservancy of Canada, and BC Parks Foundation, we were able to build a nature conservancy. So we're pretty proud of that, and we look at it as another step in the evolving and positive relationship with our Tahltan partners. The last thing I wanted to touch on is our Snip project. So this is about 50 kilometers away from Eskay Creek. We put out a resource on it last year. It's small, but it's high grade, 646,000 ounces at 13.5 grams per ton gold. We would try to see if we could make this a satellite deposit to Eskay and truck the ore from Snip over to Eskay. So that's one of the options we're looking at doing. But of course, Hochschild Mining, the Peruvian underground mining company, also has an option to acquire 60% of Snip. That option will expire in October. No word yet on if they will exercise or not. But either way, we don't get much value for Snip right now. So hopefully by October, something will be unlocked. Either will be carried forward on the project because Hochschild would have to effectively spend 2.5 times what we've spent to push Snip forward. So then Skeena would be carried, or the project will be 100% ours, and we'll look at adding it to Eskay Creek. So no answers yet for Snip because I know I'm going to get questions on that from the audience. So we're still in the waiting process, and we haven't heard yet if Hochschild's decided to back in or not. Lastly, capital structure. For most of you, you're aware we just did a share consolidation that's in preparation for a New York Stock Exchange listing. So that's on track to be completed hopefully by September. We hope to be able to open up to more of a retail audience. There's also a lot of funds that find it difficult to buy on the TSX, and also we're there. Skeena is also at almost at $1 billion market cap, and we are always eager to get our shares in the hands of more people and increase liquidity. So that's why we're working on the New York Stock Exchange listing. So very successful year share price wise, but I would argue we've got a long way to go. We're at 3.88 million ounces of reserves right now, and we see a clear pathway to 4 million and hopefully beyond that. So lots more upside potential left in Skeena. And that's everything from me. So I think I'll ask the Amvest team to come back and join me, and we can take some questions.
Excellent. And everyone, please, you can send in your questions pretty easily in the little chat or the question panel there on the control panel, and we'll ask them. Our analyst, who is in jury duty today, unfortunately, but he asked about the Capex increase and the gold payability decline from the previous study.
So it was the gold recovery dropped slightly, but the payabilities increased dramatically.
Okay.
So we lost a little bit of recovery, but because we're now able to create that higher grade gold con, so we went from a 25 gram per ton gold con to a 45 gram per ton gold con, which made our concentrate attractive to many more smelters around the world, not just those in China. Also, because of the desliming stage, we were able to remove more of the deleterious elements from the con and keep them in the tailings. So it's a cleaner con, it's a higher grade con, which means dramatically increased payabilities, fewer smelter penalties that we pay, and also our shipping costs have been cut in half because of course we're transporting half as much concentrate as we were in the previous study. So yes, the gold recovery dropped slightly, but the payabilities have gone up dramatically, and it's why the all-in sustaining cost has also dropped down to $548 US. So we're pretty proud of that, and that it was really that desliming stage that was really a breakthrough there.
Okay. Arsenic, if you could address that. Someone mentioned that and referenced, is that why you would be shipping concentrate offshore?
Yeah, so we're doing exactly what they did historically. Eskay Creek's a refractory ore body. There's no secrets there. And what they did historically is exactly what we're going to do today, which is producing and shipping a straight con. So this is not the kind of deposit where you can leach with cyanide and produce doré. It's just not that type of a deposit. What works metallurgically here is to create a concentrate. And yes, mercury and arsenic are the two deleterious elements that we deal with, but because of that breakthrough with the processing and the metallurgy, it's much less mercury and arsenic in the con. So to give you an idea, the worst year is the first year, 1.6% arsenic and 1,800 ppms mercury. Over the entire life of the mine, we pay $74 million in smelter penalties, and 40 million of that comes in the first year. And that's because we're mining out that contact mudstone horizon. But along with the higher mercury and arsenic levels also comes much higher grade. So we're also producing a higher grade in the first few years while we mine out the contact mudstone. So it's not perfect, but we've definitely had a breakthrough with that desliming stage, and it's completely manageable. I think we've received smelter terms from 15 groups now, smelters directly and traders. So it's 100% a saleable concentrate. The next step there is to send off physical samples, so anywhere from 5 to 10 kilogram samples, and that's what we're in the process of doing right now. And we've been guided that smelter terms can actually improve slightly once physical samples are received. So we actually hope to see a little bit more improvement into the feasibility study on the smelter terms, but we've definitely cracked the code on that one. It's definitely a saleable concentrate.
With the open pit approach, how much will the snow impact your operation?
Yeah, so I said we learned some lessons this year, one of which is we'll have a 24-hour snow crew. As my chief operating officer likes to say, moving snow is just like moving dirt. Also with pre-stripping and having 30 months of pre-stripping, we'll have crews on site before we actually start mining, so they'll get into a rhythm with the snow removal. It's one of the reasons we moved the plant closer to so we moved the plant and processing facility and accommodations all very tight to where the actual mine plan in the pit is, and that was for snow removal, so it's much more compact. There's a ridge that they found that they can push the snow off into. So listen, it's something we're thinking about. There's money in the mine plans to deal with the snow removal. It's not something we're overly concerned about. We were there all winter this past winter. They had record snowfall, and we didn't have to shut down at all because of it. It's manageable if you know what you're doing, and we've hired a chief operating officer who's built mines in remote northern climates. So we think we've got the right person for the job.
Would you ever build a water treatment plant?
Yeah, so water treatment is definitely part of the mine plan as it stands right now. So yes, there's money in the Capex and sustaining for a water treatment plant on site.
Okay. What is the depth and size of the pit for the current reserve?
Oh, I'm really sorry. I do not have those numbers off the top of my head. There's been a lot of numbers flying around there in the past week, but I knew the ones for the resources, but the engineered pit has changed, so I don't have the exact answer for that one.
What was the cutoff grade back in the day?
Oh yeah, so the cutoff grades ranged. So when they first started mining at Eskay Creek, it was direct shipping ore only. So they were building a mill, but until the mill was built, they just direct shipped out the ultra high grade material. And the cutoff grade was 30 grams per ton. And then once the mill was built, the cutoff grade dropped to 15 grams per ton. So that's why that waste facility, Albino waste facility, has such nice high grade material left in it.
And what are you using now from the latest study?
Yeah. Again, I believe the cutoff is 0.7 for the open pit, but I might need to double check that.
It's not 30 though. No. So
Okay.
we've made some improvements there.
Yes.
Let's pass this over to Stuart, my colleague at Amvest, and please everyone send in your questions. They'll be circling back to me, and maybe we'll bank some more, and we'll keep going. Stu?
Yeah, thanks for the presentation, Kelly. So the desliming method, when was that kind of optionality available to you guys? When did you come across utilizing that?
that breakthrough earlier in the year with our metallurgists at SRK. So, I mean, PEA, when we did the PEA, we looked at all options. We looked at biox plants and we had researched a lot more generally and realized that the concentrate route was the best way to go, but we hadn't had yet enough time to dig into the absolute best process within the processing plant. So that breakthrough kind of came in the spring. We actually put a press release out about it, but it's not quite as exciting when you don't have numbers to back it up with. So that came through in the spring, and that's what we could actually, turns out we're able to create a gold concentrate that's all the way up to 60 grams per ton gold. But we found that the prime one for recoveries and payabilities was at 45 gram per ton gold con. And that's what the smelters like most. And that's where we did trade-off studies, and that's where we got the best payabilities.
Gotcha. And then this kind of change in processing method and change in tailings, does it impact anything with permitting and tailings management?
No, I mean, not really. It's one of the many benefits of having a brownfield site and an already permitted tailings storage facility that's been monitored yearly for decades. They do water monitoring all the time. There's no remobilization of the deleterious elements, and it's why we've decided to move all the PEG material into the tailings storage facility, because we already know that that's the best way to store things at Eskay Creek, so that there's no remobilization of the mercury and the arsenic.
Gotcha.
In fact, we hope it would help with the permitting, because it was the Tahltan who suggested doing that, and we've agreed to it. So we would hope that would actually help expedite the permitting process.
Yeah, you think so?
Yeah.
And then the Capex, so what, that substation you have to build now, what's the cost of that particular item?
Oh, I think it was
Roughly
about 14 million to the cap. There's a detailed breakdown. If you go onto our presentation on the website, there's an appendix, and it has detailed breakdowns of the Capex and the initial and the sustaining and the final, and it'll give a nice breakdown of everything. But it was the power plant, the pre-stripping, and then also the addition of the desliming stage to the processing facility that were the main three contributors.
Main components.
In Capex, but the trade-off is massive, right? With the increase in payability and the better grade con.
Definitely. And then in the 500,000 ounce per annum production goal, is that kind of this region, or is that, you know, including Snip and whatnot, or is it, I think, of increasing the mine rate at Eskay and to get to that number?
Yeah, so for the feasibility, we'll be over 400,000. So that's the next step. And then how we get to that 500,000, we're not entirely sure yet. As I mentioned, we've got underground exploration, near surface exploration, Albino Lake. Walt talks about the tailings facility possibly having some ounces left in it as well, and then also Snip. So between all of those options, we're very hopeful that we'll get to 500,000, but I don't have a direct answer for you yet. But I do see a clear pathway to 400,000 ounces a year annual production for the feasibility study.
All right, sounds good. And then you talked a lot about the concentrate, the offtake purchases. When do you think you'd have, what point in the timeline would you decide on who will purchase your concentrate?
Yeah, so it'll be after the full feasibility study's out and we know all the final numbers. We've also been guided not to just use one group, to divide it up between a couple. You tend to get better terms that way. Also, you never know what happens in other parts of the world and with shipping and everything like that. So I think that decision will be made probably at some point early to mid next year.
Okay, thanks for that. I'll pass it on to Artie.
Thank you. Does the clay content homogeneous through the ore body?
Sorry, is the
clay content?
Oh, the gangue minerals? Not necessarily. So there's a lot of differences between the contact mudstones and the rhyolites below them. And so the contact mudstone has the deleterious elements, that's 30% by weight or by volume. And then the clean rhyolites are below, there's no deleterious elements. As for the gangue minerals and their division between the zones, that's a question that I have not dived into deep enough. When the PFS, when the actual document comes out, which will be filed in 45 days, it should break down every area by zone, because every area we've now determined has slightly different metallurgy, slightly different minerals in it. So I don't have an exact answer for you yet, but I know that the full PFS will break down every area by zone.
But currently, you guys are considering the adding of this desliming unit for all mine life.
I think it comes at a later stage in the mine life, so we've broken it out. It doesn't come in right at the beginning of the mine life. I believe it's later on, maybe after year 2. So as I said, every different zone at Eskay has slightly different metallurgy, which means slightly different processing. You're correct.
Yeah, and if I'm not mistaken, the gold equivalent grade is decreasing after the half of the mine life. And what kind of challenges this can bring to your flow sheet?
So the gold grade, yeah, when the grade drops off and the ounces being produced a year drop off. And as I mentioned, that's where we're looking to backfill the end of the mine life. So that's when we could potentially add a material from Albino or material from Snip or other exploration that we have. So while this is the flow sheet for now, it could very much change by the time we get into production. And specifically, once we're in production, the goal would be able to backfill the end of the mine life and add more ounces, add more high-grade ounces from other areas like you suggested.
And if we compare this reserves and the open pit mining plan, if we compare the strip ratios with the mines in the area, what would be your comment?
Sorry, if we compare which ratios?
Strip ratio of the other open pit mines around the region.
Strip? Just clarify that.
Strip ratio.
Strip ratio.
Yeah, strip ratio.
Strip ratio, sorry, apologies. To be honest, I don't know exactly the strip ratios of other open pit mines. I know 8-to-1 probably seems quite high to a lot of people, but we also have the grade to go with it. If you had an 8-to-1 strip ratio and you were mining at 1.5 grams per ton, that would be very different, but considering we're mining at 4.6. But in terms of exact strip ratios for mines in the area, I mean, closest mines to us are Pretium, underground, and then Red Chris, but that's a copper mine, so it's kind of like comparing apples to oranges.
Yeah, and my last question is, what portion of the total resources you guys converted into reserves?
So it was a 76% conversion rate from the M&I open pit resources. So it was 5.1 million ounces of M&I in the open pit, and we converted 3.88 million of that into the reserve. So 76% conversion rate.
And the rest needs infill drilling.
No, but we are doing more. So there is more infill drilling that we need to do for some other inferred ounces that are left. And we hope to be able to convert that into reserves in time for the feasibility. We hope to hit 4 million ounces of reserves for the feasibility study.
Thank you, Kelly.
You're welcome.
Sure. Thank you for your questions. In June, the stock price in the OTC gapped up from around $3, TP around 13. Any comments on this large gap?
That would be the share consolidation that we did. So we did a 4-for-1 share rollback. So essentially, you just take the pre-consolidation share price and multiply it by 4. So we were trading around $4 Canadian and then went up closer to $16 Canadian.
When you go into production in 2024, will this be in a standalone form or a joint venture with a major? If that's the number that we're using, I'll just throw that there if you want to.
I can't predict the future.
Record there.
I can't predict the future. Skeena is building a team that could put the mine into production ourselves, but that being said, everything is for sale at the right price. So if a major came along next year and offered us the right price for it, we would sell. But I can't predict which is going to happen. So we're building the team that could build the mine ourselves.
In the plan, production averages 450,000 in the PFSW for the first 5 years, increasing mill throughput in the feasibility by 15% increases first 5-year production to 517,500 without additional fines, without Snip and without Albino waste facility. Sorry for all those numbers. Do you agree?
Yes, we 100% agree. That is the plan, to increase the throughput and to hopefully break over 500,000 ounces with the current mine plan in the first 5 years of the mine life. Yes.
Okay. Again, does anyone have any more questions? Feel free to send them in, and we'll ask them right now. While we wait on that, maybe just tell us how COVID is affecting your work to date, and how you see the rest of the summer and the fall.
Yeah, so we've been extremely fortunate, but we've also been extraordinarily careful. I mean, we had up to 220 people on site at a time last summer, but we made the decision early on in partnership with the Tahltan, and actually a working group of some exploration and mining companies in the Tahltan in the area. We all had COVID meetings on a weekly basis, the operations teams did. And we made the decision to change our rotation schedules around, so a 2-and-2 rotation, so that everyone was isolated together for 2 weeks. And we also made the decision to break up the camp. So I think at one point we had 5 separate camps going last year. So we made that decision because then if we ever had an issue, it was isolated to one camp and didn't affect everyone else in all the other camps. But we were very fortunate in that we didn't have any major issues or shutdowns. We worked in partnership with the Tahltan to make sure that everyone going to the local communities, that there were no issues there. We brought testing on site. The BC government was wonderful and prioritized remote communities. So we had vaccine clinics up at camp before I would say most people in the city of Vancouver had access to a vaccine. So working in partnership was what got us through the worst of COVID. Things have lightened up substantially, but we're not out of the woods yet. So we're still taking all our COVID protocols extremely seriously, but it's so far so good.
Okay. Where is the offshore smelter located?
So we have received terms from smelters in Asia and in Europe. So we have not yet picked one. We've received 15 term sheets so far, and we're gathering as many as we can and making it a competitive process. And then we'll pick the best terms for us probably at some point next year.
And then, forgive me, I guess smelters aren't a thing in BC?
No, not this kind of a smelter. So the other option, there is the Horn smelter in Quebec, which actually used to take some of the material historically, and we've been in talks with them as well.
All right. Is the Capex designed for the 500,000 ounce a year production?
Yeah, so as the previous investor mentioned, even with just a 15% increase in throughput, we can get up to over 500,000 ounces a year. So yes, the way we've designed it now would be so that we could hit that 500,000 ounce a year mark. I can't say there wouldn't be changes in the future. I mean, if we found a lot more ounces, we could always upgrade the plant at some point later on in the mine life. That's not, you're right, that's not out of the question, but the way it's been created for the PFS, we'll definitely be able to hit that 500,000 ounce a year mark. And we will be doing it in the first few years by the time the full feasibility study comes out.
With the feasibility you have right now, what is the Capex again, and the all-in sustaining costs? What are you using right now?
Yeah, so it's $548 US an ounce. And the Capex number is just escaping me, so I'm going to pull my slide up here and we'll be able to see it here. Of course, I can't get it to go full screen. There we go. Yep. 381 million US is the current Capex. And I suspect that might increase a little bit for the full feasibility study, but it definitely won't be the jump like it was from the PEA to the PFS.
Before I pass this back to you, Kelly, to close, I just want to thank everyone for tuning in and for your great questions. Please share your feedback on your way out or in the follow-up emails that you get. You can get a copy of this event in about an hour at amvestcapital.com/replays. And to say, Kelly, it's a testament to your great communication efforts because we have had a nice number of questions, but we were not inundated with them, which would mean that there are a lot of questions that people and clarification people have. So That's really nice to point out. And with that, I'll pass it back to you to close us, and anything you want us to leave us with till your next communication, which probably is, tomorrow.
Thanks, Campbell. Yeah, so I'd say lots of exciting news to
Yeah.
come out over the next 6 months. Next up is probably some Snip drill results. I don't think I mentioned that. We are busy drilling at Snip, exploration and infill, and there's always some wonderfully high-grade results that tend to come out of Snip. So I'd say look for some Snip drill results within the next couple weeks. And then hopefully we'll have some more Eskay infill and exploration results out of that. That permitting charter that I mentioned with the government, we're really excited about that. That'll be a huge step in terms of the permitting of the project. That should be out in September. And then the big one will be the full feasibility study in Q1 of next year. So thank you to everyone, and thanks to all the investors.
Thank you. And how do we get a hold of you, Kelly, if we had further questions?
Yeah. So I moved that slide. Generally, the best thing to do is just send it to info@skeenaresources.com, and they'll make sure that it gets sent off to the right person to answer your questions.
Excellent. Thank you, everyone. And enjoy the rest of the week. Bye.
Thank you.
Thanks, everyone.